In this video, I'm going to go over my REIT income portfolio hosted on M1 Finance and how much dividend income I actually made for the month of July. So without further ado, let's get into the video. So right now I'm currently logged into my M1 Finance portfolio. As you guys can see, this is a live website. It's not a screenshot or anything like that. And we're gonna go, and this feature is brand new. It's been about a month or so since they came out with it, but you can go to holdings and you can go to dividend income here. And this will actually show you how much dividend income you're getting for either the year or the month, or how much average monthly income you're getting, right? So real quick, I know you guys can't see it, but my total income for the year should be about $9,000, right? They already paid me almost $6,000. I have pending income of $99 waiting, and I have an estimated income to finish off the rest of the year of $2,900. I'm averaging about $757 a month, which is actually really good considering that I'm going to be moving to a low-cost country, Thailand, for those of you who are not aware, and 750 bucks can actually go quite a long way out there. Actually, to be fully transparent, this is pretty much my rent right here. All right, so for July, I made $1,100, so $1,129. Pretty cool that I made that kind of money. In April, I made $1,600. And even before that, I made $1,300. Now, the reason for these two massive spikes here was because I was invested into mortgage REITs, and I ended up selling all of my positions out of mortgage REITs because they're more of a higher risk positions. And I just didn't want to risk my capital, going bad or basically dissolving. So I ended up selling out of all my mortgage REITs. There was about, I think, maybe 6 or 7 positions, and I just moved all that money back into the REIT portfolio. So I apologize if I sound kind of sick. It's because I am. I got sick over this last weekend. I've been traveling from Qatar back here to Boston, and I didn't get any sleep from basically Monday to Friday, right? And I'm traveling and being exposed to a bunch of different germs, so that's probably how I got sick. Anyways, what I really wanted to show you guys, aside from that, is what I did with the money, right? Because you could do a couple things with this money. You can either go out and spend it, right? Go buy some luxury thing. Maybe it's a plane ticket even to some fancy destination. Could be a hotel stay. As a matter of fact, I'll be heading to North Carolina in the not too distant future. And, my airfare, my hotel stay, and my rental car was going to be about $1,200, right, for a short duration, for a short stay. So my dividend income could have paid for all of that. It would have been no money out of my pocket. But instead, what I did with the dividend income was reinvest it back into the portfolio. Because if you guys remember my wealth building video, I want to continuously reinvest the dividends to grow the portfolio larger so that I can use, basically a loan against my own portfolio to go out and buy real estate. So I reinvest those dividends, not only for that, but also to buy shares of companies I like at discount prices, because the REIT market as a whole is still in the red. It's slowly coming out of it because of what's going on in the macro, specifically with the Federal Reserve. Jerome Powell hinting that there could be rate cuts coming this September, although he hasn't said it definitively. It does sound like that is what's going to happen. And that's what has a lot of, people in the real estate industry very excited. So let's take a look at this portfolio. So I want to give you guys kind of the idea behind this whole portfolio. When I first started it, the whole idea was that it was going to produce income, right? It was an income producing portfolio, a dividend income portfolio. And I know real estate, I love real estate, and I love the power of real estate, and I know what real estate can do. It's a very boring business model. I understand it. I understand all of the sectors that I'm investing in, whether it be cell towers, apartments, industrial REITs, storage REITs, these are all boring businesses. There's nothing exciting about them. There's no sexy new technology, nothing like that. Cell towers, they own massive cell towers. They lease out space. AMT American Tower, which I'm invested in, they have data centers. They have some data center exposure. So you know, AMT is taking advantage of some of that AI hype, because of, people, the companies developing AI, they need data center space. Could I buy a data center REIT, something like Digital Realty Trust, ticker DLR, or Equinix, I think, EQIX or something like that, EQIX, ticker EQIX. Sure, I did. I had both of them at one point, but I ended up selling out of them. But anyways, you also have something like Crown Castle, right? Crown Castle International, and or sorry, not International, Crown Castle Inc. And what they do is they put cell towers in very dense locations, right? And right now they're in this, business. They made a business decision to kind of spin off the fiber segment and sell it off because it hasn't really been making them money, and they want to go back to focusing on cell towers. So both these companies really good, and I've owned them for quite some time now. I believe about 3 years, and they're only now becoming green, right? Ever since the beginning of 22, when everything, pretty much the entire REIT sector started going red, I've been buying as many shares as I could. And only within the last 2 weeks have these shares actually recovered, with AMT leading the way. CCI, they're almost there. They're at 7.88%, still down, but they've recovered from, I think, 35 in the red. So doing very well there. All right, so going back, we're going to take a look at the other sections of the portfolio. I have industrial REITs, apartment REITs, very popular. They're your multifamily investments. These are REITs that own multifamily in the West Coast, the East Coast, the Midwest, the Sun Belt regions. They own them all over the place. And when you buy a single, share of this REIT, let's say you put $50 into Avalon Bay Communities, you're diversified amongst thousands and thousands of apartments, right? That's the beauty of REITs, is that you get instant diversification when you invest in them. But this is a very boring business model. There's nothing spectacular about them. They purchase new properties, they develop their own properties, or they redevelop their own properties, or they value add. And, they get tenants in there, they, get the vacancy down, they get the occupancy higher, and they just collect rents, right? Monthly rents. There's nothing sexy or new about this type of business model. And that's what I really like about real estate, is that it's a tried and true business model, and this is no exception. So REITs are very powerful. And I believe they're very powerful for wealth building and wealth compounding. Doesn't mean that I'm only invested in REITs. I'm also invested in, the stock market as well, index funds like the S&P 500. It's just that for this particular portfolio, I wanted it to generate dividend income so that I could use that dividend income at some point in the future to help pay for some expenses, or possibly to help me escape my W-2, right? So what else do I have in here? I have storage REITs, again, very boring business model. If you have a foundation, 4 sheets of metal, a roof, and a couple rivets, you have storage space. And that's exactly what this is, right? I have public storage, and it looks like they've recovered quite a bit. Extra Space and CubeSmart. And, I used to have another one in here, but they ended up getting purchased. I can't remember by who, but they ended up getting purchased. But again, very boring business model, right? Storage has actually outperformed the S&P 500, I believe, over the last 2 decades. Public storage has. So again, it just goes to show that the best compounders in a portfolio are your most boring companies. And of course, everything is hindsight, right? I could have invested in Amazon. I could have invested in Netflix. I could have invested in Facebook and all of the things. Sure, yeah. And if you like those tech stocks, if you like those high momentum, high growth stocks, then you should go with them. But I know these companies very well. I know the business models very well. So I like to stick with what I know. I'm probably not going to get like 100x return, like some of these other technology stocks, but I'm perfectly fine with that. I'm building my wealth slowly, right? I don't want to take on too much risk. And, let's say I had, $44,000 invested into a tech stock. I didn't really know how the business worked or what it did or how it operated. And then it goes bye-bye, right? We've seen this before. We've seen this story play out. You can look at things like the EV craze of the 2020s and 2021. where everyone was buying up, electronic vehicle stocks. You had NIO, you had Workhorse, you had a couple other ones, and all the stocks pretty much lost their entire value. If we do a little bit of research, I know I'm going off topic here, but I just want to prove the point about what I'm talking about. But if we go to stocks and we go to NIO, we can see that this company lost its entire value. Like, look at that. It's down substantially. If you were any of the investors up until this point, I mean, you never got your money back and you just held the shares. Another one we could take a look at, and of course I'm cherry picking, but another one we could look at is Workhorse. Yeah, I guess it got delisted or something. I don't know. But NIO, Workhorse are other companies that were heavily invested into EV. Stocks went crazy high and then they just never recovered. Right? So again, I don't want that to happen to me. So that's why I'm invested into real estate, because it's a tangible asset. Even though I'm buying REITs, which is considered paper real estate, I know that the real estate, the underlying real estate, the underlying asset that these REITs own, that is where the value comes from. All right. So back to the equity REIT in portfolio. Sorry, not equity REIT index, but the equity REIT portfolio. Again, this portfolio is a long-term buy and hold strategy. I'm purchasing these shares as much as I can. I'm dollar cost averaging over time, which means that I'm going to put a little bit of money here, a little bit of money there, and I'm just buying shares as I can. And for the dividend income that I make, the $9,000, I'm going to reinvest that back into the portfolio, because next year that, dividend income with all the reinvestments that I made could now be worth $9,500 or maybe even $10,000. And then the year after that, it could be worth $10,500 or $11,000, right? And the year after that, $12,000 or $13,000. And I start creating this snowball effect. And that's what I really love about dividend income. That's what I really love about reinvesting and compounding and all that other good stuff. So that is how much money I made from dividend income. That's kind of my thoughts on this portfolio and, kind of the direction it's going in. And I hope this video was very useful for you, very informative. And again, building wealth is a long-term game, all right? You're not gonna get there overnight. Start with $1,000. If you can't start with $1,000, start with $100, right? The point is, start investing today. You don't have to buy REITs like I do. You can buy index funds, you can buy ETFs, you could buy, stocks of your favorite companies. Investing is not complicated. If you love Nike, if you love Costco, if you love Walmart, if you love Pepsi, if you love Starbucks, and you really love those companies, if you love Apple, if you love Microsoft, then go buy those companies that you really love, that are going to be there, 5, 10, 15 years from now. So those are my thoughts on this. Of course, none of this is financial advice. You should always talk to a financial advisor or a financial professional before doing anything. I'm just some dude on YouTube. So I don't have anything else for you guys. I hope this video was helpful for you guys. I hope it was valuable for you guys. I'll see you guys in the next video. Peace.